Manishi Ray Chaudhuri, CEO of Emmer Capital Partners, joining in as we talk markets and much more. Manishi, great to have you on as always, and season's greetings in advance as we get into that festive mode. The question is the market ready to get into a festive mode as well, or do those uncertainties continue now? What do you think are going to be the big drivers for the next couple of months, and does results top the list?
Thank you very much for having me, and season's greetings to you and your viewers as well. As far as the next couple of months go, there are quite a few variables that we have to look forward to. First, domestically, one would have to look at whether more fiscal and monetary, particularly the latter, monetary stimulus, are injected. I think RBI has more room to cut rates. As of now, they have been holding back, but given the very high real policy rates, which are close to 4% or so, and the more than decade low inflation that we are seeing over there, there's a significant room that they have. And allied to this, and I think that would also influence what the RBI does, is what the Fed does in the United States. It seems that there could be one or two more rate cuts from the FOMC, which in turn could lead to further depreciation or moderation of the US dollar. And that's good news for the emerging markets as a whole, because money would tend to gravitate towards the emerging markets if that happens. Finally, and this, of course, is possibly the murkiest of all the pictures, what happens to the trade negotiations, not just between the US and India, but across the world. There are various different kind of restrictions on trade that are being imposed as we speak. But if India does achieve, some kind of a trade negotiation or an agreement with the United States, that would certainly be a significant fillip. I would sign off on this question finally by talking about the earnings estimates. We have seen consistent earnings estimate decline on the part of India right from July, August last year. It's been about 15 months now. I think earnings estimates need to bottom out and recover. We are hopeful of beginning to see that late this year or early 2026. I think that would be a significant catalyst as far as the Indian market is concerned.
Fair point, Manishi, and very good morning to you. I wonder though, usually you have the markets that discount future events, right? So the question a lot of people are asking is this that moment when you see a change in the flows, where foreign institutions say that, all right, you've had several other markets that have run up quite considerably, you have significant concentration in some of these major markets where a few stocks have resulted in the running up of the benchmarks as a whole. Is it time now to take some money off the table, maybe even in certain other asset classes like gold and silver, where you've seen such a big run up, and a diversification perhaps into a market that has underperformed and could start performing, as you've pointed out, by the end of the year or the start of next?
Great, thanks. That's an interesting question because it packs a lot of variables, packs a lot of questions into one. So first of all, I think, on the part of the foreign institutions who have a whole spectrum of markets to look at, they're currently playing a few themes, and possibly the most important front and center in their minds is the AI CapEx theme, where the hyperscalers in the United States and the AI enablers in North Asia are the center of their focus. Now, unfortunately, India does not really have plays in these segments. India does have a few AI adopters, but not quite the enablers. As long as this theme remains front and center in the FII's mind, I think their focus would continue to remain on North Asia. Because there you not only have the companies which are coming up with new LLMs, there are companies which are enabling the compute, the massive compute requirement that you have with the AI LLMs, and you also have a few adopters who are enhancing their productivity. Now, if this theme and a few others kind of subsides a little, then it's quite possible that the focus of FIIs would come back to India. And I would also say that, for India, the impact of this huge monetary and fiscal stimulus that we have seen all throughout the year, starting with the income tax slab adjustments earlier, and then the GST cuts and the rate cuts that we've seen from the RBI, that's likely to have some impact on consumption. We've already heard anecdotally from the auto and a few other segments that it's having a significant impact, on buyer behavior. These two things are actually crucial. The focus getting away from some themes which are prevalent right now, and India, at least the earnings picture beginning to improve. And, those are the two things that we have to wait for.
All right. So, Manishi, thanks so much for joining us today and for speaking to us and giving us that perspective. Pleasure having you.